Welcome to my weekly review. Today is Saturday, May 25. It's a 3-day weekend as we honor the veterans on Memorial Day on Monday, and we'll be back at it on Tuesday. So thank you for tuning in to my weekly review. I'm going to get right to it. This is a daily chart of the Nasdaq, which started a power trend on Monday of last week. That power trend criteria that our friend Mike Webster created was the low of the session was above the 21 for 10 days. And this 21, which is this pink line, was above the 50 for 5 days. And we had an up day, which was Monday, this day right here. So we started this power trend on Monday. Tuesday was another positive day where it made a new high. Wednesday, we had, another high of 16,855. Then on Thursday, it ran up to nearly 17,000, 16,996, right up against 17, and then reversed lower. And I could not believe how many the bearish sentiment was unbelievable. And that to me is a healthy thing, that as soon as, we have a couple of days of, profit taking, people get all bearish. So there's a lot of non-believers out there. I think there's a lot of shorts who want to see this market go down. And as long as we have skepticism, this is healthy for a bull market. We can continue to go higher. It's when everybody's in the bull market boat that the market can't go lower. That's when it sinks. So we don't want to sink the boat. We want plenty of bears out there. We want plenty of skeptics. And to me, I mean, I expected, after this selling day, went up to 6,996 and then closed at 736. Near the lowers of the session, you can see that, kind of expected this probably to follow through to at least a 10 EMA, but it didn't. It had an inside day on Friday and, traded back near that 17,000 level, 947. So, just take it one day at a time, but it seems like the market has no memory. Like these candles don't mean anything. Like the next day, it just comes right back. And that's probably a lot of machine trading. Machines don't have memories. But anyway, I just wanted to point out the Nasdaq is in an uptrend. We can expect higher prices. But remember the last time that the Nasdaq got rolling, when it got up to 6-7%, right there, 8% above the 50. If you look at the bottom of the screen there, the red number, SMA 50, it was 8% above the 50, that red line. And that's when it usually pulls back. Mostly, when it gets to about 6%, it got a little wonky. It got above it, but then it pulls back to its moving averages. Here it's 5.9%, and then it pulled back to a moving average here. It got up to 6.2%, then pulled back to a moving average, and so on and so forth. Here it was only 4.2. You can see that red line's catching up. So that's what the number that I'm looking for right there, around 5.86%. It usually pulls back. Right now, you ask, we're 4.4% above that red line, which is the 50 simple. So I think we have room to run higher. Maybe that 17,000 number is going to give us a little bit of resistance, but there's no reason to think that this market can't trade higher. We are in an uptrend. The trend is your friend. Don't fight the tape. All those idioms and sayings are true for a reason. And so the trend is your friend. I, as a swing trader or trend trader, I don't try to buy the bottoms or sell the tops. I just want the meat of a trade out of a stock. And so I don't try to get too tricky that way. And the trend is definitely our friend. Last week, it's a weekly review, so I got to go to the weekly chart here and just tell you that it was up 234 points, or 1.4%. The volume, I don't even look at the volume. There's a lot of these crazy penny stocks that are being traded, hundreds of millions of shares a day, which is kind of skewing the data. But I had to go to the S&P 500 because it was flat on the week. I know a lot of people were complaining that it was a choppy market and they had a tough week. We had a fantastic week at MZ stock charts. And sometimes you get in the zone and do well, and other times you just don't have a feel for it. Right now, we're doing pretty well. Anyway, I don't like to brag. I just, stating a fact here. I have troubles and struggles just like anybody else. But this is flat on the week, up 0.03%, 1.45 points. Couldn't get any flatter than that. I did want to point out that the Dow, S&P, the Dow, and the Nasdaq are all in power trends, But this one traded up to 40,000 and then pulled back. See, the prior week it was up to 40,051. Last week pulled back 2.3%. So these large round numbers do have psychological effects on the market. There, you see, it was up there a couple of days where it hit 40,000 and then pulled back to a moving average. This still looks okay to me. I don't trade indexes. I trade stocks, and this week I'm just going to dedicate the weekly review to Nvidia and the AI revolution because I think it's just starting. A lot of people think it's near the end and everything's going to crash, but I'm just going to start with Nvidia and then go to some of the themes around Nvidia and the AI revolution. And then I'm going to get to some other stocks that I like and stocks that are doing well. And we have a lot of stocks set up in bases at mcstockcharts.com. So I'm looking for another positive week next week. All right. So Nvidia, of course, had the blowout earnings report. Never in history have we ever seen a company this large, it's what, 2.6 trillion now, delivering triple-digit sales and earnings growth. And of course, the bears will say, well, they can't keep that up. Well, of course not. They don't have to keep it up. This stock is getting cheaper every time they report earnings, though, and it can go much higher. So we're looking at a daily chart of Nvidia. It broke out, at 500, then ran up to 974, and that was kind of the area where it reversed on March 8th. Everybody remembers March 8th, and it got into this consolidation pattern and now broke out of a base. So if you look at the weekly, and I would say, breaking out of a base like that, typically you can expect a stock to, run 10 to 20%. So yeah, 1200 is not out of the question for Nvidia. You can see the RS line just heading due north, blasting through the moving averages. This thing's showing a lot of power and a lot of strength. And this is, the stock that has to be mentioned if you're going to mention the stock market these days. And anyway, I don't want to sit here and belabor Nvidia. Everybody knows Nvidia. And although I do want to point out that I don't believe it's over-owned. As you can see here, the institutional fund ownership here, 7,355 funds, and you could see all the biggies own it. But Microsoft there, remember that number, 7,355, because Microsoft has 10,300 essentially. So like 3,000 more funds own Microsoft than Nvidia. So I think Nvidia has room to run. Anyway, some of the hardware names, the semiconductor names that are going to benefit from this AI revolution, certainly ARM Holdings, just in a consolidation pattern. It ran up, probably some short covering here to 164. Now it's consolidating in a base. But if this AI revolution is going to play out for years, which I believe it will, this is just it's just a holding pattern right now. Yeah, it's going to trade higher over time. You can see the earnings the line heading due north for that one. Another one is Qualcomm. These semiconductor, fabless stocks are going to be reaping the benefit. We had this one on our ready list a couple weeks ago, and it was it was like 179 or something, and now it's 210. Where was that? Yeah, right here. There's this double bottom base pattern. Now it's just it's run, it's run 20%, like, you kind of expect it to after breaking out of a base. Most stocks will break out of a base, run 20, 25%, and then pull back and form another base. So that's what Qualcomm is doing. AMD is going to get its share of the AI pie as well. It ran up, got ahead of itself a little bit at 227, now just forming a base. And this is healthy action for these stocks to form bases. Taiwan Semi is another one of these semiconductor plays. You can see the double bottom base here in the breakout. Let's see what that looks like on the weekly. Yeah, it was up 5 weeks in a row. Okay, so that's another O'Neill tip when you're up 5 weeks in a row. Some of the equipment stocks, Applied Materials, definitely going to benefit. ASML has got a monopoly on equipment. Lam Research, they just announced a 10-for-1 stock split, I believe. Another one that's going to benefit over time. They're not going to go up every day or every week or every month, but over time, these things are going to benefit. We're seeing a lot of rotation in the market. So now as I talk up AI this weekend, you know it's going to sell off next week, and probably the defense stocks of transportation will rally. But anyway, that's the way it goes. I did mention Microsoft because there's going to be some software names that are definitely going to benefit from this AI revolution. Here's Microsoft. You can see that earnings line just trending nicely higher. This one's consolidating in a base as well. I should go to the daily chart here, and you can see that consolidation pattern there, actually since 420 back in February. So Microsoft's been in a holding pattern for a while. Google, you know, you hear about this CapEx spending numbers from these companies like Google and Meta, and there's just a lot of money being spent. Amazon, that this earnings line just trending higher over time, folks. Not every day or every month. You got to give these stocks some room to wiggle around. This is Meta. They sold off when they said they were spending, you know, $100 gazillion, and Zuckerberg thinks it'll pay off longer term, and I'm not going to argue with him. It's just consolidating in a base as well. That pullback there to 414 was a gift. And you can see its earnings line is ticking higher as well. Amazon, I mentioned them. Another beneficiary. Yeah, just look at that earnings line for Amazon. Jensen cited ServiceNow as one that's going to be a big player here in software. That one's trending higher. NTNX is another one, software name. You can see this one, earnings line trending higher. This one we had on our ready list 2 weeks ago, I believe. And there's a nice shakeout. It had a double bottom pattern. The shakeout was 1 day. That's why you have to be quick here. It sold off 1 day, nearly 3%, traded down to the 10 EMA and bounced, and then just moved higher. So NTNX is another one, and the software names, ESTC, Elastic. They report this week, I believe. Yeah, May 30. So they've had a couple of gappers higher, and then last time gap lower. So we'll have to see. But over time, these are the ones, and there's more. There's plenty more, but they're going to benefit from the AI revolution. There you can see the earnings line ticking higher. That's enough with software. I got to go to the hardware space. These servers, Dell, certainly, Jensen cited Dell as well. And when Jensen says he speaks, you know, everybody listens. So he's the king. And this one, you know, a lot of people give me flack about this one when I post the chart because it doesn't have, you know, the visible earnings and sales growth that, you know, they want to see. But if Jensen says it's going higher and he anoints it, it's going higher. SMCI is one that probably got a little bit ahead of itself here. Might be some short covering on this rally out of that 350 area, went up to 1,077, then pulled back. Everybody thought it was dead. It ran up to 1,229. Everybody thought it was, you know, a climax top for sure. And now it's going to pull back and it's dead, but it's probably just consolidating. Like I say, if this AI revolution plays out over the next 5 to 10 years, SMCI is going to be a big winner. It just got a little bit ahead of itself. Very low float here for SMCI, only 48 million shares. So I would expect a stock split from these guys sometime this year. Anyway, some of the cooling agent stocks is Vertiv Holdings is another one, beneficiary of our AI revolution. You can see the earnings just ticking gradually, nicely. This company has strong management. You can see the group here, top 20 group, and just consistent sales and earnings from that one. Another one is Mod, and there's a lot of these HVAC stocks that are just auxiliary players in the AI revolution. This one, you know, trading higher, consolidating in a base. And the thing about Mod is they reported last week and they missed. And this tells me something about the health of the market, because when a company misses like they did, and it just came down to the 50, and then it bounced, and now it's trading higher and it's back near that old buy point of 106.01. You know, in a bear market, this thing would have crashed and burned down to the 200. In a sideways market, it probably would have just gone sideways. This thing just bouncing off its moving average, which is shows resilience, and it just shows the, you know, kind of the strength of this market. Another one in that group is Train. This one is just like a freight train trading higher. You could see earnings line heading north on train. Anyway, the networking group, Arista Networks, is definitely going to be a big winner. Like I say, they're not going to go up every day or every month. This one just formed a base here, blasted up the right side of its base, and then pulled back last week, 4%. So yeah, I mean, that happens. That's almost like a fake breakout. Sometimes or oftentimes when a stock builds the right side of its space that quickly, there's going to be a lot of profit taking and a lot of sellers in here. So a pullback is not unexpected there. I mean, when you run from 240 up to 329 in a very short period of time, there's going to be some profit takers, just like we saw on the index on Thursday. When you get near highs there, people are going to take profits. That's part of the game, and you should be doing that too. Take some trim, throw some in the bank, buy something nice for your significant others. NetApp is another one. This data storage play, NetApp is one. You can see the double bottom base pattern. We had this on our ready list last week. That thing ripped nicely for us. MU, you can see the earnings line here. MU is another one that's going to benefit. Micron, you can see the reversal here. This thing's ready to power higher. You can see this one in a base. Just consolidating here in a base. It's got that paint by numbers 135 point, but if you got it closer to the moving average, I like buying close to a moving average. But I think, over time, like I say, over time, not every day or every week or every month it's going to go up, but over time, that one I like longer term. And then Pure Storage, Charlie Giancarlo's firm, double bottom base. This one I can't put on our list because it's extended a little bit and they report earnings on the 29th, but I would expect big numbers from Pure Storage. Another group, this is kind of an auxiliary play from the hardware, software, server, cooling group, and that is the energy group. Constellation Energy is my favorite in this group, although I like Vistra as well. And this one is it's got a nuclear component. And you can see the earnings line heading north as the stock is heading north. And a lot of people give me flack on this one too, that it's overvalued or overbought or blah, blah, blah. But they're going to deliver more than $8 in earnings. And I just play the trend. If the market wants to take it higher, I'm along for the ride. The trend is your friend until it bends at the end, and this one's not bending. You could see this group is 17, so it's one of the top groups. There's just a ton of them that I like here. That's alternative energy. Vistra is another utility electric power. The group isn't doing as well, but this has a nuclear component as well, and it's got the David Ryan Ants indicator here in a couple areas. But you can see last week up 6%, just a phenomenal week. Yeah, it's probably getting a little extended. Doesn't have the that earnings line like we'd like to see, but yeah, up 8.5% last week. That one looks good. So I can't decide between those two. NRG Energy, another utility diversified. The group isn't that strong, but you can obviously see this one has just been ramping higher, and the earnings line is trading higher. And it's just amazing how it's just a great tool the market surge has, the earnings line, because a lot of companies follow their earnings, and I'm kind of a stickler for earnings and sales, and that's why I miss out on some hot stocks because I kind of like some earnings and sales with my stocks, and the energy has it, although I don't own that one. Sterling's another one that I like. Its earnings line is trending higher, and you can see this is kind of a stair stepper a little bit. Just broke out of a consolidation there, but 2 weeks ago, yeah, nice 27% move. So now it's just kind of trading sideways here, allowing the moving averages to catch up. But that's another one that I like. Eaton, this is a big conglomerate. This is talk about the trend is your friend. Yeah, just supported at moving averages. So that's another one that I like. GEV, this is a spinoff from GE. Yeah, just what can you say here? This is a great spinoff, and GE is doing well, and GE Vernova is doing well also. And the last one is Power Quanta Services. Talk about the trend is your friend, folks. I had this one on our ready list last week. It was up 7.2%. you can see it's just a consolidation. Pattern rec isn't picking this up, but if it consolidates in a base here for 5 weeks, I mean that's a base to me. And then just broke out last week out of this little box area, as Darvis liked to buy them as they broke out of boxes. And I would have to say that 7.2% is a nice breakout. We'll take that every week. But you can see this building heavy construction component is a strong industry group as well. And the last group I'm going to get to, and you can make the connection to the fiber optics. We need copper. Southern Copper has been ramping, and it's kind of out of character to see this stock move like this, but it pulled back. Copper came down last week, the commodity itself, and the stock pulled back as well. And I think you got to embrace pullbacks here in a market like this. Yeah, 6.2%. Don't fear the pullbacks. You got to embrace them. I know it doesn't have the earnings, but I think this one trades higher. Same with FCX Freeport, another one of the miners. Yeah, the earnings line south and the stock north. And then, which I don't like, glowworm, Corning, another one that's going to play the fiber optic. You can see it just broke out of that flat base a couple of weeks ago. Let's see what this looks like on the daily. Yeah, it's a nice breakout higher, and it just continues to trade higher. So that's yeah, 5% move. Yeah, and just trading higher. So glowworm looks right. Anyway, that's it for me. No, hold on. I can't leave without doing the drug stocks. This is another theme, along with the AI theme and the energy theme, that these weight loss drugs are not going away anytime soon. Novo Nordisk, I mean, this is pretty clear to see the tight trading in a base here. This thing looks fantastic. What I want to see now is just a pullback, a sharp pullback, maybe to the 10, which is 133.42. So that's not much of a pullback, $3. Shake some folks out and then rip higher above the old 138.28. You can see Novo on a weekly, that base there. Yeah, it's a late stage base, but if you look at the monthly, I mean, this thing's been a monster for a long, long time. Just a big winner. Yeah, I mean, hello. So anyway, it doesn't mean it's guaranteed to keep going up, but these stocks have been winners, and these weight loss drugs are just getting started. Novo just got kidney. They did a big study about how it improves kidney, and then they're getting into cardiovascular. They proved that, cardiovascular disease is the #1 killer in the world, and they're going after that market. They just bought a company to address that. They're very aggressive with their acquisitions. This is Eli Lilly, another stock that I like. I really only like 2 drug stocks. Lilly's, double bottom base. It looked like it was going to break out here on Tuesday, I believe, and then kind of pull back. Wednesday and Thursday didn't do much. Flat Friday, so we're going to give it a pass. I think this thing's going to break out. And what did I say earlier? 10 to 20%. So yeah, I think we're looking at 900 here on Eli Lilly, and eventually 1,000 in time, right? Not every day, every week, or every month. Your stock's going to go up, but in time, Lilly's going to be a big winner. I have to mention the oil and gas transportation group, because they've just been on fire. I don't own any of these yet, but you can't argue with performance. This is International Seaways, INSW, doing fantastic. FRO Frontline, another one in this group, which is a top 30 group. You can see the consolidation pattern, that flat base, and now it's been up 1, 2, 3, 4, 5 weeks in a row. Remember, O'Neill had something to say about these stocks that run up 5 weeks in a row. You got to buy the book, How to Make Money in Stocks, and learn about it. And then the last one is LPG. They reported earnings and that thing sold off, and then it just ramped. Maybe it was this day, it pulled back to 43 and then traded up to 40, nearly 48. But anyway, nice looking pattern here for Dorian LPG. The ticker symbol's LPG. And the last group that I'm going to show is the shippers. This is a little bothersome to me. This is inflationary as well as a dry bulk shipping group has been just on a tear. This is Global Ship Lease GSL. You can see this, this is a daily chart. I mean, it's just going up every day. I'm surprised it doesn't have the David Ryan ants there. But you can see the earnings going higher, and the stock is following along, and that's been up more than 5 weeks in a row. Zim, our old friend Zim, nice IPO. We traded this nicely during the IPO, and they just forgot about it as they were doing like $20, $25 dividends, just crazy stuff. But anyway, you can see the sell-off and now emerging out of a stage one base here, that cup with handle. Let's take a look at the daily. You can see this pronounced cup, with handle pattern, broke out. Now it's got some ants as well. Zim looks fantastic. And the last one, CMRE, Costamare, and this one, hello, a breakout, just trading higher. Let's see what that looks like on the weekly. Yeah, these earnings going down, stock going up. Anyway, that's it for me. Thank you for watching. Except for I lied. In honor of the great Steve Jobs, I'm going to ramble on some more and talk about my favorite group, aside from the AI and all that, is retail shoes. And there's no arguing with Decker breaking out here of a base last week. Let me go to the daily first. You can see it formed this base. Its last base was here. It was what, 568, and then it ran up essentially, 903, 900 area. It did make a high at 956 and then formed this base here, but now it broke out. And like I said, I think you can expect, 10, 20, 25% move before it forms another base. So from 956, you can see it's 13% from the pivot in the day. And that's a move not to be ignored, Dan. Yeah, 14%. Anyway, Deckers with their Hoka brand. Hoka, they bought for $1 million in 2013. That delivered 530, 540 million in a quarter. It's doing more than 2 billion in a year, and they bought it for $1 million just 10 short years ago. So Deckers, one of the greatest apparel acquisitions ever. And I gotta set you in on some news here, folks. This surpassed Nvidia and Hanson's Natural as the greatest appreciating stock of this century. Deckers Outdoors, nobody talks about it. It just quietly goes about its business. Well-managed company, but it's outperformed Nvidia and Monster Hanson's in 2020. This century. How about that? Anyway, Decker's just a monster. Congrats to the longs there. We kind of figured that they were going to have a strong quarter. If you just look around, you go to the gym, so many people wear Hokas, and young people, old people, men, women, boys, girls, lots of folks wear the Hokas. Anyway, that's just my Peter Lynch style. When I go to the gym, I observe, or anywhere I go, I observe footwear because I'm kind of a weirdo that way. And I see a lot of people wearing Crocs. This one's on our ready list at MC Stock Charts. It's set up in a base here. Kind of a deep base. What's the depth? 19%. Anyway, it pulled up, it traded below the 50, rallied above it. This is their earnings. They had strong earnings and then pull back here, which, I mentioned earlier, when a stock makes the right side of that base there real fast, there's going to be some profit taking. So this one pulled back to its 10 EMA last week and then bounced a little bit on Thursday and really had a nice move on Friday. But to me, this thing has not made its big move yet. And like I said, 10% would be $14, 20%, $28 from 148. So, yeah, I could see it above 160 here pretty soon. Anyway, that is CROX. And CROX earnings line needs to tick up a little higher. Once they figure out, hey, dude, this is going to be a powerhouse footwear company as well. I mean, the clogs are on fire and the sandals, but Hey Dude had 17% year over year negative growth. So they have to figure that out. And they hired an individual from Stanley to market that brand, the Hey Dude brand, in their opening stores. So we'll see how they do with Hey Dude. Anyway, a couple more in the retail space, on holdings. I have to mention, I see them at the gym a lot, and you can see that earnings line heading due north. The stock is still trying to emerge from this base. It's still an IPO base in my mind. What was it, 55 back in 21 before the market crashed? And then it's still emerging from a stage one base. To me, this one has room to run, but it's going to take, like I said, weeks, months, even years. They have to have more quarterly reports, where they're going to be showing this sales growth. Now, 58, 34, 23, that decelerating sales growth is not ideal, but it can pick up in subsequent quarters, and triple digit earnings growth will take all day, every day of the week. And the last one I wanted to show is ELF. I've been talking about ELF since the sell-off here and the Ulta Beauty. They are not the same brand as Ulta Beauty. Yes, Ulta Beauty sells ELF, Target, Walmart, but these guys, if you listen to their conference call, I would suggest listening to their conference call because they give a lot of insight on how they run their business. And obviously, there was some short covering here. This one's running up, traded below the 50 for a long time, first of all, ran through the 50, and I believe it's going to attack that 221 at some point. But like I say, when it forms the right side of the base real fast, you can expect some profit taking and some selling. But 71% sales growth, massive margins. The earnings was down a little bit. They talked about, inflation and that, they're manufactured in China and the tariffs, and there's just some things affecting their costs, but certainly the demand is there. So the CEO sandbagged another quarter, but 38% growth expected next quarter. I'm sure they'll surpass that. That's just the way they run their business. They sandbag, they lower the guidance, and then they just crush earnings. And I suspect they're going to continue to do that. Last week, ELF was up 21%, which will take that, all day. So anyway, ELF, you can see here, is still consolidating in a base. Its prior base was more symmetrical. This base, we have the sharp sell-off, and now 1 week. This is just the first week, 20% move. I would expect it to kind of gradually, build out the right side, having some down weeks and some up weeks, but be patient with that one. You can see the short interest is pretty heavy here in ELF. Anyway, that's it for me. Sorry for the long video. There are some folks who say when the market is good, I have long videos, and when the market is bad, I have short ones. So thank goodness we have a long video. The market looks fantastic to me. And nmcstockcharts.com, we never give up. I'll have a new ready list on Tuesday morning as we celebrate Memorial Day. Thank you to all who served. At mcstockcharts.com, we never give up.